8 years ago, I was a college student with no idea what I was doing, trying random strategies, trying to grow small trading accounts. And in the beginning, my first summer, I took about $2,500 and flipped it into over $15,000, only to make one stupid mistake and blow all of it in one day. After that, I spent years clawing back, acquiring information, but fast forward to now, I'm lucky enough to have $15,000, sometimes $30,000 profit weeks, and have scaled my trading and investing capital well into 7 figures. Knowing what I know now, if I had to start over with a small account, these are the 6 secrets that I would use to grow those accounts quickly with also not blowing up any accounts. These keys took me years to actually figure out, and number 6 is probably the most important of them all, that took me from honestly losing money in my trading journey with small accounts that now allow me to size into my day trades and scale up my trading accounts. And my goal is to get you to that point as well. So let's get right into it with secret number 1, which is only focusing on high quality trade setups. It's really easy to fall into the trap in trading and thinking, well, if I can make $300 in any given trade, if I just take 10 of those, I should be able to make $3,000 in a day. If I take 20 trades, I should be able to make $6,000. This is not how it works in trading for a few reasons. First big reason is because trading, all you're trying to do is adhere to your strategy as closely as possible. And there's only going to be a certain amount of trades in any given session that are going to follow those A+ setup criteria. If you're trying to take as many trades as possible, the probability of you forcing trades that aren't there and taking lower quality setups are going to be extremely high. The second thing is you're paying execution fees. So if you're taking a ton of trades that maybe aren't your best quality, they may not move fully in your direction, and you may end up spending a lot more on fees than you've hoped. And additionally, it's really stressful to try to make the right decisions all day throughout the session. And if they're not perfectly to your strategy, trying to use your discretion to be right. And it's going to be way less stressful if you follow this tip that I'm about to share with you. This is what I always do when I'm about to get into trades, and I've taught this to a ton of people who have thanked me deeply for this lesson. And that is, before entering any trade, try to find every single reason to not get into the trade. And what this is going to do is eliminate something called confirmation bias. And confirmation bias is basically trying to change things a little bit and try to go outside of your rules a little bit to convince yourself that there's a setup there so that you don't miss out on an opportunity. And as difficult as it is, I try to find every reason to not take a trade. And if everything is a green light saying this is undeniably within your system and a good idea, those are always the trades that end up playing out to full fruition and being massive successful trades for me. And if I'm sort of hesitant, trying to convince myself it's a good idea, these are always where I start to get in trouble. So this will allow you to be hyper selective and only focus on your highest quality setups. And also, you don't have to trade all day long. Okay, so let's move into secret number 2, which is mastering trading as a game first, then focusing on the money second. And this seems counterintuitive because obviously the point of trading is to make money, but in order to actually ever achieve that, you need to learn it as a game and not focus on the money at all. So this is what I mean. As professional traders, we're looking at our trading with something called expectancy. And this expectancy formula is how much money we're expected to make on any given trade within our system's framework, regardless of whether it's a win or a loss. And this is going to be important for multiple reasons that we'll get into a little bit later into the video. Okay, but what we do is look at trades in terms of units of risk or percents of account. And basically, whenever we're entering a trade, we put a certain amount of risk on the table with an expectancy to make a certain amount of reward if we're right about the direction of the position. Now, this is important because if you can strip the money away from this and just look at this as a simple game, this is where you actually get into the mastery of understanding trading, the mechanics, how your strategy works, and the way you need to actually act to then be able to inject the money back into the process basically by default. And now you understood the framework and the money is just a byproduct of you being a good trader. Okay, what most people do in the beginning and what unsuccessful traders are going to do is they're going to make their decisions around how they feel about the money. And I used to fall into this trap in the beginning. If I was up on profit on the day, I would try to hold on to my profits as tight as I could and I would be changing my behavior. If I was down on the day, I would revenge trade, take more trades, maybe some that weren't there, trying to fight back to positive, which is changing the behavior I know I need to do in order to be successful. Or if I was up on the day, I would take crazy risks that otherwise I wouldn't take, which would end up eating into my profits as well. So let's look at this scenario in terms of a bad trader and a good trader, what the good trader is doing to actually be able to be successful. So say both traders are starting with $1,000. The bad trader is risking $100 per trade, loses 2 trades back to back, and then in order to fight back to positive, they double down, put $200 of risk on the next trade, and then lose that, ending up with 3 losses, with now nearly half the account lost, and them almost needing a 100% return to climb back to even getting to break even. Notice how they're increasing their risk when they're not performing well and exponentially needing to perform better and better to pull off miraculous things in order to have a fighting chance at maintaining their account. Now, let's look at scenario number 2 with the good trader, also starting with $1,000. $1,000, but this trader is only using 2.5% of their account, or $25 per trade risk. Say they lose 3 trades back to back, are only down $75, keeping their risk uniform each time. Even with 1 or 2 normal size wins, now their account is back to break even, actually into small profit, and they don't need to pull off any miracles in order to preserve this account and have a fighting chance. But this example goes to show you that trading is a long-term game. In order to even have a shot at this, you need to be able to preserve capital. It's really easy to start changing things, revenge trading, doing what you're not supposed to do when the money is a component of this process, and you're risking different amounts of money on each trade depending on superstition, how you're feeling, your confidence level. They can easily get you completely thrown off the ball. Focusing on it like a game is going to eliminate all of that and make it much more simple for you to understand what's right, what's wrong, and what's going to work over the long term. Okay, I always tell people trading is not about being right, it's about making money. This is oftentimes misconstrued. Every time I show a trade to someone who doesn't know trading, they're always like, well, how do you know that this is going to work? And I answer back to them, I'm like, I don't know if this is going to work. And they look at me all confused. But if I'm following this process that I know works over time, all I need to focus on is deviating from the criteria as little as possible when I'm executing. And I know if it's a successful strategy, it's going to result in profit over time. So the significance of any individual trade actually doesn't matter at all. Being right doesn't matter at all. It's not about gambling or fast money. The only job of a trader is to execute the plan as precisely as possible, minimizing risk and maximizing upside potential. And treating it as a simple game first was how I was able to actually get to that point. Okay, so let's get into secret number 3, which is do not take profit too soon. When I first started my trading journey and I was talking to people who really didn't understand trading, I would hear things like, no one ever went broke taking profit, take profit if you have it. And if you've had things that have been in profit and gone to loss, this may make sense initially, but this is actually the worst possible thing that you can do as a trader, and maybe some of the worst advice that almost made me completely fail at this entire journey. So here's how to avoid it. Okay, I've done this so much. This is probably one of the biggest things that I need to combat in my trading, is taking profits off too soon. I've been working on it full time. I'm getting much better at it, as I'll show you here in a second. This is what to avoid. Okay, so most people say they enter a trade hoping that the price is going to come up to here before coming down to here. Trade starts moving against them. All of a sudden it moves really quickly against them, and now they don't want to lock in a loss, so they'll end up holding it. Then, just desperate not to lose any money, as soon as the price comes back to the entry, they take it off for substantially less profit than they were exposing themselves to. And from reinforcing that sort of mindset, maybe they enter a trade here, price starts moving down against them. They think, okay, well, all I have to do is hold this again until it comes back up so I don't have to lose money. Then the trade just continues to drop so far that they're forced to realize a massive loss. Or say you buy in at a level like this, trade starts moving really nicely in your direction. Then all of a sudden it starts coming almost all the way back down to your entry. So then you take the trade off so that you don't lose money, only for the trade to continue moving all the way in your direction and resulting in a massive win. If you're falling into these traps, you're basically flipping the successful mechanics of trading on its head. By not wanting to realize a loss when the trade is moving against you, you're opening yourself up to catastrophic downside. Okay, and if you're taking trades off early that are starting to reverse, you're basically reacting emotionally from being scarred from watching trades move into profit and then come down and make you less money, and it's preventing you from actually allowing your full edge to play out and your wins to be open-ended. What you need to be doing, and what successful trade mechanics are, is always being disciplined about your risk and understanding the math behind the game to make a decision on where you're going to take profit before you even enter a trade. That way the temporary fluctuation in price has no impact on your emotions and can play fully out in your favor. Some of my biggest trades have been when I'm away from the charts or actually overnight, and the reason for this is because I can't look at the chart and try to justify reasons for me to lock in profit. If I'm risking $1,000 and I'm up $6,000, and then I watch that $6,000 turn into a $2,000 win and I end up getting closed out, next time I'm in that situation, it's really hard to not think about it and want to lock in the 6K that could then turn into $15,000, $20,000. And this is really where a lot of the money is made in trading, is allowing your winners to run like crazy so that when you go on losing streaks or you're not performing successfully in trading, you can actually still be okay. And I'll show you an example of this happening to me recently. So I get into a trade, price pushes almost all the way back up to my entry before breaking down and moving in my direction. Then eventually I get a big push down in my direction. You can see I locked in 1,300. I have $1,500 in profit still open, risking $1,000 on the whole trade. And you can see price starts to move up against me, but because of my strategy and because of my rules, I don't take the trade off. And then this trade continues to immediately reverse, continues moving substantially lower, which resulted in way more profit than if I'm just taking the trades off at this level. Okay, the money is made in trading or letting your winners run and keeping your risk contained. Okay, and this takes us into secret number 4, which is using one strategy at a time. In the beginning of my trading journey, there was a period where I was completely completely lost. I was trying to find all sorts of different ideas to try to apply into the market. And what I would do is basically try to find different patterns, different ideas, and just go into the market with just general ideas and try to see if I could make profit off of it. And I'd have some patterns that would work, and I would think this is the golden goose egg. This is the perfect solution that I've been waiting for. And it would stop working for some time, and then I would bail out on it and jump to the next idea. And this is wrong for two reasons. This is why it's important to focus on only one strategy at a time. And the first reason is sometimes the best trading strategy isn't going to be the one that looks like the apparent winner. Everything in trading needs to be rooted by behavioral studies and data. You can't improve what you don't measure. If you're not measuring yourself and looking at your patterns and looking how to optimize that, you're never going to be able to get to the next level, because it's not always about following what looks and feels to be apparently the right answer. Okay, and if you're jumping from strategy to strategy, it's going to be infinitely harder for you to be able to isolate variables, focus on what you know works, and actually be able to have conviction and get good at one single thing. So let's take this for an example. Say we have two trading strategies. One trading strategy wins 60% of the time and the other wins 30% of the time. Most people are going to see, oh, this is working more, I should go with the strategy that is working more often. But if we look at a scenario like this where we have our 60% win rate, but when we're losing 5R, 5R, this can still result us over time in negative R and actually give us an unprofitable result. Where if we take that same 30% win rate strategy, we're literally losing 7 out of the 10 trades, but when we're winning, we're making positive 5R, positive 5R. Say we were just trading this and jumping from pattern to pattern, maybe we're getting streaks of success with a higher win rate strategy, so we feel like it's working, and because the strategy that wins less, maybe we have a lot of losses right up front. If you're not measuring that and you're jumping around from strategy and not focusing all your effort on one, the actual answer to your trading that is less apparent may actually never come to you. And this is also why I harp on about it being extremely important to journal your trades. Like I said earlier, you can't improve what you don't measure. What feels like it's the best may not actually be the best in trading. Okay, and once I picked one strategy at a time to focus on, this allowed me to get into there, focus on the probability and statistics of each strategy, master it, have an execution plan, and then apply it into the markets without needing to guess on what I think is working, what's not working. This is where I was able to start scaling accounts and turning my trading into an income generating machine rather than just guessing and gambling. Okay, we see this with our team as well. Most of the time we have people come in and learn, and the ones that end up getting really, really good and becoming profitable are ones that are hyper focusing on mastering one strategy. Jack of all trades is a master of none, and the same is true in trading. Which brings us to secret number 5, which is preserving your capital. Okay, this is one of the big ones and one of the most important things in order to have longevity in your trading. As good as your strategy is, and as much as you study the data, there are just going to be individual trading sessions where price action is not good for your strategy. Okay, it's really hard to account for that, but what I used to do is I'd be doing really, really well, I'd be following all the strategies, and then I would have a day where even though I'm following all of my rules, I just keep losing way more than what I was statistically probable to lose. Sometimes market conditions are just going to be bad for your strategy. It doesn't necessarily mean that your strategy is broken or you're doing something individually wrong, but this is a really dangerous territory as well, because you can think that you're doing something wrong, and if you're not careful, you can overtrade because you're thinking, okay, it's not statistically probable for me to have this many losses in a session. I should just keep trading because it's a weird anomaly and I need to make some money to even out my data. And this can lead to what we call blow up days or lapses in judgment that can erase a lot of progress. It can be very, very discouraging to come back to if you have substantial losses. And these drawdown periods can either make or break your success. If you have a really bad day, then God forbid you have a second bad day after that, it's almost impossible to recover. Okay, so what I do for my trading in order to prevent this is basically have a rule for myself that if I ever at any point go down by 3 total loss amounts, I'm done trading for the day. So if I take a loss back to back, I'm putting a pin in it and I'm moving on to trade the next day. Say if I have a win where I make 3x what I'm risking, and then I proceed to lose 6 consecutive trades, I cannot place any more trades, and this basically prevents me from having any single day destroying all the progress that I've made. The only way I could actually lose is if the next day I'm reapproaching the markets, finding my quality setups, and then I lose 3 again, and if you factor all of this in and you distribute it over enough data, the probability of that happening is substantially lower. This is going to keep you in the game and not allow one lapse in judgment on any given day destroy your entire trading account that you've been working on growing. The goal of trading is to have enough consistency over enough of a duration for you to be able to then take profits out of and sort of treat as an income generating machine for yourself. If you're just working on growing an account and then blowing up, growing an account and blowing up, you're never going to be able to have the stability to treat this as a job. And preserving capital and having these stops on your trading was the number one way that allowed me to prevent blowing up accounts. Okay, which brings us to secret number 6, which was probably one of the biggest aha moments in my entire trading career that really allowed me to start scaling accounts and turn trading into a true income machine for myself. Okay, and this is a pitfall that's really easy to fall into and really hard to sort of navigate through. This is what I found worked for myself. And the secret is, do not set and chase daily profit goals. Even though while I'm making content, I have a daily profit goal, this has already been run through and calculated through this process. So I'm going to show you how to actually set and achieve your daily profit goal, but it's not by chasing that dollar amount each day. Here's what I mean. Okay, most people who are trying to solve a big problem, say we're looking to make $10,000 a month in trading, we're going to break this into small pieces. Most people will think, okay, well, if I'm trading 20 days out of the month, that means that I need to be able to make $500 per day in order to hit my $10,000 goal. In academia, in regular life, taking this goal and breaking it into smaller goals is a logical next step to achieve the main goal. Here's why it doesn't work in trading. Say we're looking to fight for that $500 daily profit. And on our first day of trading, instead of making $500, we actually lose $250. That means that the next day, in order to stay on pace, not only do we need to make the $500, but now we need to make another $500 and recoup the $250 that we lost on the day that we were supposed to make $500. And like we were talking about, all the other psychological traps with, holding trades through losses, putting more risk on a trade in order to try to fight back in revenge trade, you become way more susceptible to changing and modifying your behavior, trying to hit those daily goals. And by chasing that goal, you end up inadvertently shooting yourself in the foot and never being able to accomplish the goal. But this is how I found I can actually set and hit profit goals while making sure that I'm still following all the fundamental principles with trading. Let's say, for example, our goal is still $500 a day and we're aiming to trade 20 days, which means over the course of a month, the goal is $10,000. So what I found works is taking the goal, not focusing on the money at all, and reverse engineering success through following a process-based goal. All I would focus on at first is finding a repeatable strategy that I know it works. Then I'm taking it into a simulated environment, so you can go onto your trading view and use the replay feature and basically trade and journal this out over several months. It's not really several months. It's going to take realistically between 2 and 5 hours to do this process, but you'll have 2 or 3 months worth of complete data as to how you would perform with your strategy over time. And out of this, all you have to do is calculate how many risk factors you made. So if you're risking $100 to make $300 and you make $300, that's positive 3 risk factors. If you lose 100, that's negative 1. And that's the only number that you need to find out. So say over the course of these 20 trading days over a single month, we're statistically likely to make positive 15R with our strategy. Now all we're doing is taking the monthly goal and the 15R, and we're dividing this monthly goal by the 15R, which is going to give us how much risk we're going to use on each trade that we take in order to, by default, reverse engineer our daily goal without ever actually focusing on the dollar amount. And this ties back into treating trading like a game. And now all we have to do is focus on, as closely as possible, adhering to the strategy that we know works. We set our fixed dollar amount, and by default, we're able to hit our goal, but we're not falling into the psychological traps of trying to hit that dollar amount every single day and not knowing how much we need to risk actually to end up hitting our overall goal. Okay, and say you come up short of that goal, now you know what your actual data is over time. You can make modifications to this model, and this is really how you're going to treat trading more like a business. This is why when we take people onto our team and through our education, first we start with the foundation, and we're only focusing on the process first and not focusing at all about money. Then we drill into the data-proven strategies, and then in the implementation phase and the practice phase, this is where we can start integrating capital. This is basically what worked for me that I boiled down that I now share with others. Okay, and you can see when students are sharing their success, they're showing in terms of R. 8.5R win. In this case was $1,200. Shout out Felix. You can see Nicholas 10R win on Sol. See another example, up 14R today. In this case, it was 670. So focusing on that process first. And this is incredible for me to share, but just to show you sort of what's possible, we have members like Joe here. After first locking in the process, was able to lock in over $72,000 worth of profit via 5 payouts from TopStep. Right, you can see another one of our traders here focusing on process, equity curve, higher lows, higher high, and focusing on that process to be able to do this. We got Pat. Shout out to Pat. This month he's had one of his best trading months. He already made $20,000 worth of profit on his accounts. You can see here. We're also getting new funded traders basically every single day on our team. And it's just humbling for me to be able to see that I've gone through the trenches of this, made these mistakes, take all the information that I've learned, aggregate it down, share it with people that in their first several months are able to do things like this. Trading is one of those things where if you master it even at a small level, all you have to do is inject more capital into it and you can really turn it into a machine for yourself. Okay, if you want to dive into more trading strategies, I'll put videos right here. If you're interested in joining our team and learning more, I'll put the link right here and in the description below. If you're still here and you appreciate this, make sure you hit the like button on the video, subscribe if you want to know when I drop next ones. But until next next time, I will see you all in the next one.